Hey, good morning, everybody. It's Thursday, February 26, 2026. I, of course, am Hammer, the founder of great products that help my loan originator friends get more business in 2026. Products like Originator Success, Grab and Go Social, and Rate Sensei. Go check those out. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern Time. Got cat hair all over my hat because I was just petting George. Anyway, you can join me live each and every weekday morning, 9:30 a.m. Eastern Time. If you're here this morning, say good morning. If you're watching on a replay, don't forget, give me a hashtag replay in the comments. If you'd like to join me live, or you do join me live and you want a reminder that I'm going live so you don't miss a moment of the show, you can sign up for that text alert reminder at hmmr.io/reminder, or use this cool QR code over here. While you're out there signing up for stuff, remember we send out an email each and every weekday morning. You can sign up for that at ratelockadvice.com. It's absolutely free. Make sure you share that with your LO friends, ratelockadvice.com, or use the cool QR code on the screen. And the paid product, if you would like, is $7 a month. You can sign up for Rate Text Alerts at $7 a month at www.ratetextalerts.com. All right, so go check those out. Thank you for joining me. If you're here this morning, say good morning, and let's see what we got. Today is National Chili Day. Ron Siegel, my friend Ron Siegel, says today is National Chili Day. You know what that means for the question of the day. We're going to ask you, beans or no beans? Is it chili? Beans or no beans? Is it even chili if it has no beans? That is the question of the day today, since today is National Chili Day. Question of the day, beans or no beans? You weird Texans that like your meat sauce and call it chili. Chili has beans. Chili has beans. It does. Beans. Gotta have beans if you're going to have chili. That's my take on it. What's your take on it? Let me know. Quick hello to all the other live folks here this morning. Carolina Small, Yasmin Martin, good to have you here. Mr. Zane and Ms. Amy Blauser, great to have you. Randy Tico, giddy up, sir. Giddy up, sir. Watched yesterday's YouTube replay. Awesome. Thanks, man. Angela Walters, good morning. Kathy Jensen, Mike Brown, great to have all of you here. Vicky McSweeney, good morning. So y'all answer that question since today is National Chili Day. And while you're doing that, I'm going to go ahead and get started. We'll go to the good stuff here. Let's go ahead and start off with a look at the technicals this morning. Pull up some Presentify here real quick for you so we can draw on the screen. Taking a look at the technicals, you can see we're starting the day with, what happened to Presentify? Oh, didn't come up. Hold on a minute. Presentify. Let's try again. There you go. Okay. All right, so taking a look, you will see that we are up this morning 4 basis points to start the day. Not super impressive, but enough, right? It's a little bit, gives us something to work with. We'll do a quick recap what happened yesterday. Let's zoom in on this, and we will show you here what happened yesterday. And let me move the screen a little bit so you can see the whole thing. Well, you know what? I got too many things going on here. Hold on. There we go. All right, so what happened yesterday? You can take a look here. Pricing came out. We were right around 100.31. Remember, we're testing 100.38. That is the high point that we are testing. We tested it again yesterday midday. Mortgage-backed securities did improve coming up to that point and then fell back down and fell a little bit lower. Ended the day worse than when pricing came out. Not all that great. And actually, if we take a look at a 5-day, you could see that we did come up and break that 100.38, which is right here, this line right here. Okay, we broke that level one day and tested it here and tested it here. but yet not really staying above it. So there was right here, we ended at 100.42. It was just barely above 100.38, almost enough that I wouldn't even count it. But you can see that we've kind of crested midday here, and since then it's come down quite a bit. Which is not good for rate sheets and pricing. But as far as yesterday goes, it looked like a more volatile day than it really was. There weren't any reprices. It looks like there was movement. It was up, it was down, but really we're so stuck in a range. Things aren't moving, right? We're still that 10-year treasury above 4.0. I do not think we're going to break into the threes unless we get something happening outside of the technicals to help. We need something fundamental. You need something in that labor market data or something else to make a difference there. So rate sheets today, let me adjust the screen and we'll pull those over and pull those up. Let me move this over for you. Rate sheets today, about the same as yesterday. Arguably a smidge better, earlier in the week. But at 5.99, yesterday was a little bit worse. And then today should be about the same, very much right in that same range there. So as far as lock advice goes, I'm going to throw that on the bottom of the screen and then we'll come back to the question of the day. As far as lock advice, I would be locking anything closing in the next couple of weeks. That puts us generally around the second week of March. Why? I wouldn't float into the labor market data March 6th hoping for help. It's the only chance that we really have to see things improve beyond this level here, right? Is to see that labor market data, and I don't think it's going to happen. If we got extremely weak labor market data, how far could it really push Fed probabilities of a rate cut? Markets right now, no expectation at all of a Fed rate cut. So we'll come back to that in a minute, though. Reprice risk on the day is low. There's really nothing of value on the calendar this morning. I think there's let's take a look at the calendar here. I think there is a, whatchamacallit. Come on. Thursday. Here you go. So we got, treasury auction. So we got a treasury auction this afternoon. Doesn't matter. Yesterday's treasury auction, didn't matter. Not going to matter at all. As far as jobless claims go, I do have those. I have that article prepped here. Jobless claims this morning, they were, a little bit higher. Still, you're talking 212,000. That's still low. The cutoff used to be 300,000 and we're down near 200,000. That's a big difference, man. It's all the people that are talking about signs of labor market weakness, but yet the reports are struggling to show it and back that up. So as far as the Fed outlook goes, as we were kind of alluding to before, no expectation of a Fed rate cut in the March meeting. April meeting, it's all the way down to about a 15% chance of a Fed rate cut. And even in June, it's losing. We're less than a coin flip now. It's leaned a little to the other side that we will see rates stay the same, even when Powell is out by the June meeting. So really not anything to put out there. Again, as far as the outlook goes for rates, I've said it before, I'll say it again, I'll say it over and over. Rates really have nowhere to go right now. There's not really any room to move lower. These are great rates. I love how when I see an article and it says, we still have high interest rates. Most people, even if they have to pay a point or pay a little bit in rebate, most people can get a rate in the fives now. In the fives. Those are not high rates. They're only high rates compared to when we had a total shutdown to the economy and we were in the middle of a pandemic and rates were, in the 2s and 3s. But otherwise, you're talking about rates in the 5s. This is a happy time, man. This is a great time. Sorry. Still getting over being sick and I can't breathe. By the way, thank you for all those birthday wishes yesterday. Yes, I'm officially 50 now. A new decade for me. So, but anyway, that's it, my friends. Really not much else to point to. Tomorrow, we've got the wholesale producer price index coming in, and it's not going to be anything to really shake things up. Don't expect rates to get any better tomorrow. You don't need to lock anything that's closing in the near term because we haven't seen any movement in rate sheets. When you take a look here at the when we take a look here at the candlestick chart, you could see that we are right here is 100.38ish, right about there. And, we're in a very tight window here. Yes, we did go ahead and break it at this one little tiny spot right here, but I mean, barely. It was barely better. You almost want to put it like that, right? So there's really not anything to prove. In order for rates to improve from here, we'd have to see mortgage-backed securities move higher, which is very unlikely to happen. And we don't have a lot of risk of them moving lower either. They're just kind of treading water. Tomorrow's wholesale inflation not going to cause much of a move at all. Rate sheets not likely to change anytime soon. Very much in that same range as what we've gotten used to here, putting right within the low sixes and arguably the high fives. So that's kind of where we're at. And people are paying attention. There's business out there. Go get it. Go get it, my friends. So Ron Siegel said there seems to be a correlation between NASDAQ and the 10-year Treasury. That said, do I think NVIDIA earnings today will affect bonds, Treasury, or MBS? Not that much. The article, I mean, do you, Ron? Because you're kind of throwing me out there for a softball. Stocks fall as NVIDIA's outlook fails to inspire. Arguably, did that have any effect on rates this morning? If we take a look at where, they started the day, not really. I mean, there's not much of a move. So, but the reason the NVIDIA thing is because of the AI outlook and pricing, and that's what's pushing stocks right now. But I don't think so. As far as the Iran situation, I don't think that's going to really spook anybody. I don't think we're actually going to, fire on Iran. We'd have to fire on Iran to see a flight to safety. And I don't think that's going to happen. But so let's go to the chili question. I will throw the lock advice to the side. Let's go back to the chili question. Let's see what your answers were. And then we'll wrap it up today. So beans or no beans? What do you call that for chili? Ron Siegel says today is National Chili Day. Vicky McSweeney, yum beans. It is without, but regionally, give me beans. Yeah, I'm going with beans. Kidney beans for me. I know Einkorn is team beans because he's picked on Christopher Griffith many times for that Texas meat sauce that they call chili. Yasmin Martin, she says beans for sure. Ron Siegel says beans. Beans are good for your heart. The more you eat, the more you have chili. Randy Teakle, he's a Texas guy, and he said beans make it go further. Randy, I'm glad that Team Texas there still says with beans. Ron Siegel clarifies that he is with beans. What about chili verde? Listen, I'm American. I don't know what verde even means. What is chili verde? What is chili verde? I got to even look this up. Chili verde, classic Mexican stew featuring tender chunks of pork. Well, that sounds pretty damn yummy. But that's not the chili that I'm used to. That doesn't have beans. Well, but that's chili verde. That's not chili. That's not the same. It doesn't count. And that's like a meat stew. It is a Mexican meat stew. Beans, no beans. Yeah, no beans, it's gravy. I'm with you, Mike Brown. If it doesn't have beans, it's gravy. Chili verde over chili. I'll take both bean and no bean chili. Aren't y'all in Utah? Really? You guys got this chili verde stuff? You sound like you guys are down in New Mexico. Angela Walters and Zane and Amy and y'all. Let's see. Jerry said would be great if they stopped squeezing the govies on pricing. Jerry, remember something? We look at conventional, pricing. We look at conventional bonds. Rather, but if you look at the govies, because remember there actually are govie bonds. Rate sheet pricing for govies is better, but when you look at the Ginnie Maes, your Ginnie Mae 4.5 is up 11 basis points this morning. If you take a look at that, the 5.0 is up about 6, and they do move very similar to what you see move in conventional pricing. But you're going to see some of that. If Mortgage News Daily, according to these guys, they say that your you're almost a half a point better. So you were 3/8 of a point better, really 3/8 of a point in rate between Govy and conventional. So this could creep down a little bit, but it's going to struggle to move much lower than that realistically. There's just not the yield for it, and that's why. So geopolitical risk over the weekend, I'm not too worried about it, Ron. Ron's point here, that would be why you'd want to lock up, especially loans closing near term, but that might be why you want to lock some stuff up. Good job. 15 minutes to tell you nothing's happening in the market. Listen, I have been very clear on that. I agree with you 1,000%. Rob Stewart is going with either because he loves chili. Avila, team beans. Yeah, definitely. So, all right, my friends. Well, I'm going to wrap it up. Join me tomorrow so we can talk more about how nothing is happening. At least then we can talk about how the producer price index wholesale inflation data came in, but it's not going to move rates or pricing. It's going to be a quiet end of the week. We're not going to see any big changes. This is a nice spot. Get out there and get business. I hit the button a little early. So anyway, I'm wrapping it up, my friends. Thank you again for joining me. I'll see you guys tomorrow. Take care, everybody. Bye-bye.